Hi everybody, this is Gary Dean with Sentiment Timing, and this is our free technical video report for Wednesday, May 15th, 2019. The markets had a pretty good bounce today. This was expected. We're running into some resistance where it's going to be either make or break for the bulls short term. And what we mean by that is it can either go up or down, and it would make sense. And when we're in that kind of environment, what we do is we kind of just lower our position and then wait and let the market tell us what it's going to do. And I'll go over that in the charts tonight. But we got short at the 29.42 and covered our shorts at 28.10 and a little bit above that, and now we're holding a third of it with a stop at 2900. So if the market decides to go down tomorrow, fine. I'm holding on to a third of a position on the short side. If it decides to go up and we get stopped out, then the market's probably going to come up and start closing gaps, and I still would have made 40 points on the S&P, and from there we'll probably have a rally going right into the kill zone, which is now could turn into a black hole. And the black holes are important because these are the types of moves that it makes. These are black holes where we just go kind of straight down, and this one should be here. But anyway, these are the black hole moves, and it takes a lot of people by surprise, because what typically happens is the market refuses to go down and kind of hovers up near the highs, and then things just collapse. And that's one of the reasons why I'm anticipating that we're going to see the gaps above get filled, and from there, and if they don't and we end up going down, we'll just wait for the next sell trigger. But it was a great run off of the lows, and now we're in a time period that we're going to be entering that kill zone, and the volatility is not going to go anywhere. And knowing what sentiment is, we had the 1% sentiment reading from the big drop that we had, and so far that marked a low. But if it's not the low, it was just really a short-term low, which we bounced 50 points off of it. If it's not, then that's fine. It's going to go down, and we'll look for the next pivot. So right now, the predictive analytics model, things are getting very, very interesting here, because short term we got the drop that we were looking for, and now intermediate term it's just neutral, because we're coming to the tail end of the bull run that Woody had predicted from in December, that was going to last into the springtime, and that's exactly where we are right now. As many of you know, that it took a different roadmap than I was anticipating, where I wasn't expecting it to go straight up without really any major tests of the lows. But that's what really brings the market to the extremes on the bullish sentiment, and from there a lot of people end up getting trapped. So as far as where we are in the model, where short term we were at the euphoria, we got capitulation with the 1% bullish sentiment reading, which meant everybody was bearish. But intermediate term, we're still in this area. So short term, it would make sense if we came back up to that euphoria time period as we head into the kill zone. But we still may need another capitulation low before we go. And like I said, if whatever the market does, it does. I'm very open-minded on whatever direction it goes. So here is the sentiment charts. Nothing has really changed. We had the extreme bullish sentiment readings. We had the extreme bearish sentiment reading. That did mark the low, and we so far have had a 50-point bounce. So stay open-minded with this, and I'll go over some of the things in the charts, but I just want to go over the 100-point S&P guarantee. We've done this before. We have never had anybody ask for their money back, and it's at that time period. We only do this when we see big moves that are going to be taking place, and it's running into our predictive analytics model when we have time, sentiment, as well as technicals all looking either up or down. And it's there. If we don't make 100, if our calls don't make 100 S&P points in 90 days, you can ask for your money back, and we'll give it to you. And it's going to be in both directions. We most likely, the first trade is going to be looking on the short side, but where we are right now, if we get a capitulation, another capitulation low, and we get a buy trigger, I may try the long side. So once we make our first trade, this offer is off the table because there's going to be no way of tracking when new people come into it. So if somebody came in 2 weeks later and are expecting to get a 100-point moves, but we've already taken 140 points, it's not going to qualify for the trade. So there's two things you could do. One is you could do the $2.99 for 90 days. Use coupon code 100SPX. Or if you wanted to, you can do the yearly one, and it's still the same offer, where if we don't get the 90 points, the 100 points in 90 days, you can ask for your money back. But this way, if you took advantage of this, then now you have your $600 savings. So let's go over the charts and see what's going on here. So this is what I'm talking about. We're at a make or break. The bulls need to push it above our previous bull bear line, which is the 2864. But if we take a look, if they get above the 2864, we have resistance at 2880, which is also pretty close to this price high here. So the bulls really, to get out of the short-term woods here, have to get above the 2900 level. If they do that, then we're going to look for this gap at 2927 to get filled, as well as the 2943. If that happens, most likely it's going to be running into that kill zone. Everybody's going to be bullish again, looking much higher, and we could take out the highs. I'm not saying we can't, but that's going to be heading into the time period when the predictive analytics model is going to be bearish, and bearish. So that's really the risk right now, and why knowing when the time period is for this, and to expect it, and then just wait for sentiment to get to an extreme level, and then wait for a sell signal. And I believe that we'll have 100 points pretty quickly, just like it was 150 points on the downside here. So we're pretty confident with it. But right now I'm open-minded, because if the bulls can take out the first line in the sand, is going to be the 2880, then they're going to need to go to 2891 and the 2900, and then we start looking at these gaps. Now, if the bears can push it through the 2813, they still got to get through the 2800, and then we have another support level. This should be a magnet down to the 2785. Now, if the bulls lose this line, then I'm anticipating that we're going to come down and close this gap at the 2743, and possibly come down to our target 2 that we were looking at for this drop here, which is 2722. So things are getting a little bit interesting here. We don't have any bullish divergences, so it would make sense if we go down. But the thing is that we're still very oversold right here, so we still could head up. And again, we're still looking for these gaps to get closed before we head into the kill zone, and from there, then it's going to be every man for himself, because I don't think a lot of people are going to expecting what's coming, because if it does end up being a black hole situation here, these are the moves that we're anticipating, and there's a lot of money to be made with them. So again, if you're interested in taking advantage of this 100-point S&P guarantee, take advantage of it now, because once we make our first trade, this is going to be off the table. Doesn't mean that you can't still join us. It just means that guarantee is off the table. So with that, have a great night, and I'll talk to you guys at our next update.